The day you turned 65, the law quietly moved you into a completely different category, and nobody whose job it is to collect your money is ever going to call and tell you what that means for your bills. Not your county, not the IRS, not Medicare, not a single agency that has been taking money from your account for decades is going to pick up the phone and say the words you were supposed to hear years ago. You may be legally exempt from bills you are still paying right now, today, this month. And the gap between being legally exempt and actually stopping the payment is not complicated. It is one form, sometimes one phone call. That is the only thing standing between you and money that already belongs to you under the law. 5 bills. Stay with me to the 5th one because that is the highest value of everything on this list and also the simplest to fix. Most seniors who act on only one thing from this video pick that one. Subscribe and turn on the bell before we go any further. Because every single exemption I am covering today has a filing deadline attached to it, and when that deadline passes, the exemption does not apply retroactively. You do not get back what you overpaid. The county keeps it, the IRS keeps it, the agency keeps it. This channel tracks every deadline and every rule change the moment it happens, so you are never the senior who finds out a year too late. Here is exactly what you are getting before this video ends. 5 specific bills you may be legally exempt from right now. The exact question to ask at each agency to start the process. The one group of seniors most people assume this list does not apply to, and why they are wrong. And at the end, the 3 bonus moves that matter most for the senior sitting on a home that has grown significantly in value. All of it before this video ends. Stay with me. My name is Dale Creston. For over a decade, I have studied Social Security rules, IRS programs, and the financial regulations that quietly cost seniors thousands of dollars every year. Not because they made bad decisions, but because nobody explained what changed or what it meant for their specific situation. That is the only reason this channel exists.
I do not care whether you are 62 or 92. I do not care whether you own a paid-off home that has tripled in value or whether you are living mostly on a Social Security check in a rented apartment. I do not care whether you have a tax preparer you have used for 20 years or whether you file your own return at the kitchen table. Watch all 5 of these before you decide a single one of them is not for you, because the seniors who talk themselves out of this list are precisely the ones leaving the most on the table. And before we go any further, let me clear up the most expensive myth on this entire topic, because this is the assumption that costs seniors thousands of dollars every single year. Most people hear the words legally exempt and picture 2 very different groups: the struggling low-income retiree who really needs the help, or the wealthy senior with a big estate and an accountant who already knows all of this. And so the person in the comfortable middle, the one living on a normal retirement income, on Social Security, and maybe a modest pension, sitting in a home they paid off over 30 years, that person tunes out, assumes none of it applies, keeps paying bills they stopped owing years ago. Both ends of that assumption are wrong, and the person in the middle pays the highest price for being wrong. Some of what is on this list helps the lower income retiree the most in raw dollar terms. Some of it is worth a small fortune specifically to the senior sitting on a home that has appreciated significantly. On every single one, I am going to tell you exactly who it helps the most so that nobody watching this can honestly say that part is not for me. Now, the first bill. The newest exemption on this entire list is also the one being missed the most, precisely because it is so new that most tax preparers have not fully caught up to it yet. Starting with the 2025 tax year, every American who is 65 or older qualifies for a brand new additional federal tax deduction of $6,000. Not instead of the standard deduction. On top of it, $6,000 knocked straight off your taxable income just for being 65. If you are married and both you and your spouse are 65 or older, that is $6,000 each. $12,000 as a couple, stacked on top of everything else you already get. This runs through the 2028 tax year. And here is the part that surprises people every time. You get it whether you take the standard deduction or you itemize. It does not matter which way you file. The deduction is yours either way. It does begin to phase out at higher income levels. As a single filer, it starts shrinking once your income crosses $75,000. For a married couple, $150,000. Above the high cutoffs, it disappears entirely. But think about who that leaves: the vast middle of American retirement, the retiree on a normal, modest income. For that person, this is real money, taken straight off the amount the government is allowed to tax. Here is what genuinely bothers me about this one. The people it helps the most are the exact people least likely to catch it. The 65-plus filer on a normal retirement income who files their own simple return, or hands it to a basic preparer who is moving fast through a stack of returns. That is precisely the person who will not notice whether this deduction was applied, and who will quietly overpay without ever knowing it happened. The action here is simple, and you can do it in 2 minutes. When your return is prepared, before you sign it, look at it and confirm the additional senior deduction was actually taken. If you use software, make sure your date of birth is entered correctly. That is what triggers it. If you filed your 2025 return already and this deduction is missing, the fix is a Form 1040X, an amended return. The window to amend a 2025 return does not close until April 2029, but every month you wait is another month that refund sits in the IRS system instead of your account. Call your preparer this week and ask specifically, was the enhanced senior deduction of $6,000 from the one big beautiful bill applied to my return? Not a general question, that exact question by that exact name. The second bill is where the largest dollars on this entire list are hiding, and most seniors have not filed a single one of the 3 forms that protect them here. Your property tax bill. Every state in the country offers some version of relief for homeowners who are 65 and older, but here is the problem that costs people year after year. Most homeowners assume these protections are automatic, that they happen when you buy the house, or when you turn 65, or when someone at the county notices. In most states, not one of them is automatic. You have to file a form, you have to ask, and in most counties, nobody is going to ask on your behalf. The first layer is the homestead exemption. What it does is take a chunk of your home's assessed value off the books before the county ever calculates what you owe. In Florida, that chunk is $50,000. In Texas, it is $100,000 off the school portion of your bill. Every state is different, but in nearly every state, it is real money. And in most states, you file it once, and it stays on as long as you own the home. Miss the filing deadline, and you pay the full bill that year for no reason at all. The second layer sits right on top of that. It is the senior or age 65 exemption, a completely separate additional exemption that most counties offer on top of the homestead, and that the county will almost never mail you about on its own. In Texas, every homeowner 65 or older gets an additional $10,000 off the school portion on top of the homestead. In Florida, the senior exemption can be another $50,000 on top of the basic $50,000, doubling the reduction entirely. And this is exactly where comfortable retirees wrongly tune out. They hear the word senior exemption and assume there is an income test they will fail. In more than half the states that offer this, there is no income test at all. Texas, Florida, Georgia, Tennessee, Alabama, you turn 65, you file the form, you get it. Age is the only qualification. The third layer is the most powerful of the 3, and it is the one almost nobody has filed. It is called the Senior Assessment Freeze. When you turn 65 and file the freeze application, the county locks in your home's taxable value at whatever it is the year you apply. From that day forward, it does not matter how much your neighborhood appreciates. It does not matter how high values climb on your street. Your tax is calculated on that frozen number permanently. In Texas, once you file the over 65 tax ceiling, your school district property tax is frozen at the actual dollar amount you paid that year. Your home can double in value, your bill cannot rise. For the senior sitting on a paid-off home in a neighborhood that has appreciated significantly over the last several years, that freeze is worth a small fortune, compounding every year into the future. And for anyone renting, I told you at the start this list was yours too. Here is why. Your landlord pays property tax on the building you live in and passes every dollar of every increase directly into your rent. When those bills are frozen or reduced across a community, rent increases slow. This is not abstract. This is your monthly payment. The action on all 3 is one phone call. Call your county assessor's office and ask by name, do I have the homestead exemption, the senior exemption, and the assessment freeze on file for my property? Write down the answers. For any that are missing, ask which form adds them and what the current filing deadline is. That one call can permanently change the trajectory of your largest annual bill. The third bill disappears from your Social Security check before the deposit ever reaches your bank, which is exactly why most seniors forget they are paying it at all. Your Medicare Part B premium. In 2026, that premium is $202.90 per month, pulled automatically from your Social Security deposit before you see a single dollar of it. $2,434.80 per year, gone before it lands. But there is a set of programs most seniors have never been told about that changes everything about that number. They are called Medicare Savings Programs. And if your income is under the limit, which is significantly higher than most seniors assume, your state will pay that premium for you, not lower it. Pay it, the full amount, which means those $202 stop disappearing from your check every month and your deposit goes up by exactly that amount. The most generous version, called the Qualified Medicare Beneficiary Program, does not just cover the premium. It also eliminates most of your deductibles and co-pays entirely. The bills that arrive in your mailbox after a doctor visit, gone. And here is where I need you to stay with me, because this is precisely where thousands of seniors wrongly count themselves out and hang up on money that was already theirs. The income limits are far higher than people assume. A single person with a monthly income up to approximately $1,815 may qualify. For a married couple, the line runs into the $2,400 range per month. If you looked at this 2 or 3 years ago and were told no, the limits moved. Go check again. That door may already be open. Beyond the premium, while you have your state's SHIP office on the phone, that is your State Health Insurance Assistance Program, completely free, 1-800-MEDICARE gets you there, ask about extra help in the same conversation. Some people know it as the low-income subsidy. It is aimed at a completely different bill, the cost of your prescription drugs under Medicare Part D. In many cases, getting approved for a Medicare savings program enrolls you in extra help automatically. 2 of the single largest health cost breaks in the entire system, both unlocked by 1 phone call and 1 application. For a senior taking several prescriptions a month, the combination of these 2 programs can be worth more than everything else on this list. And both of them are sitting there unclaimed right now by millions of seniors who qualified and simply never applied because nobody ever told them the program existed. The 4th one on this list is smaller in dollar terms, but I am not going to skip past it, because it is still a bill you can legally stop carrying in full. And when you start stacking small reductions alongside the large ones, the monthly number begins to move in a way that actually changes how retirement feels. There is a federal program called Lifeline. It takes $9.25 per month off your phone or internet bill. Many states stack their own additional discount on top of that, pushing the total reduction higher. For a senior paying a monthly phone bill on a fixed income, that is a real line item removed from the budget permanently. And separately, if heating or cooling your home is ever a strain, there is the Low-Income Home Energy Assistance Program, LIHEAP. It helps pay your utility bill directly, paid straight to the utility company so you never have to handle the money yourself. Depending on your state and your household, it can cover anywhere from a few hundred to approximately $1,000 per year in energy costs. And the crisis component, if you have received a shutoff notice or your heating system has failed, there are emergency funds specifically for that situation available on shorter timelines. The action on both is simple. For Lifeline, go to lifelinesupport.org. For LIHEAP, dial 211. That is a free helpline in most of the country that connects you directly to your state energy assistance office. I want you to hold on to these 2 because they matter most when stacked alongside everything else on this list. The senior who captures all 5 of these is not the one who acted on the biggest one and ignored the rest. They are the one who understood that the entire point is the combination. Now, stay with me for the 5th one, because I told you at the very beginning this was the one worth staying for. And it is. Most seniors already know that the tax code gives filers over 65 a slightly larger standard deduction than younger filers receive. What most seniors do not know is exactly how large that advantage has become when you stack everything that is now available, and what it means for money that has been quietly leaving their account every single month out of habit rather than necessity. Here is the full picture. Every filer gets the regular standard deduction. Then every filer who is 65 or older gets an additional amount on top of that, a second separate bump that has been sitting in the tax code for years. And now, starting with the 2025 tax year, both of those stack with the brand new $6,000 senior bonus deduction I covered at the start. Put all three together, the regular standard deduction, the long-standing senior add-on, and the new $6,000 bonus. What you find is that a very large number of people over 65 owe significantly less in federal tax than they currently believe, and a meaningful number of them owe nothing at all. But here is the trap, and it is a quiet one that costs seniors real money every single month without ever announcing itself. Those same people are still withholding federal income tax from their Social Security check using a form they filled out years ago and never revisited. Or they are having tax withheld from their pension at a rate that made sense when their income was different and their deductions were smaller. And so every month, money leaves their account on its way to the IRS, money that is going to come back as a refund 12 months later. An interest-free loan to the government, paid voluntarily, out of habit. This is the most common and most fixable money mistake seniors make. And the fix does not require a fight with anyone or a complicated process. It requires one conversation with a tax preparer and one adjustment to a withholding form. When your return is prepared this year, confirm that your regular standard deduction, your age 65 additional deduction, and the new $6,000 senior bonus were all applied. Then ask whether your withholding should be adjusted going forward. If your tax liability dropped significantly, and for many seniors it did, your withholding rate may not reflect that yet. Adjust it now and keep that money in your monthly deposit where it belongs. And if the cost of paying someone is part of why you have been putting this off, hear this directly. You do not have to pay anyone. There are 2 free programs staffed by IRS certified volunteers specifically for seniors. One is called Tax Counseling for the Elderly, TCE. The other is AARP Tax Aid. Both will sit down with you, prepare your return for free, and they know exactly which senior deductions to look for. For most seniors watching this, the cost of finally capturing every one of these exemptions is nothing at all. Now, if you own a home with real equity, and many seniors do after decades of building it, there are 3 bonus moves I want to give you, because for the right person, each one of these is worth more than everything else on this list combined. The first is a property tax deferral. In a number of states, once you reach a certain age, you can choose to stop paying your property tax bill entirely while you remain in the home. The state simply settles up when the property is eventually sold or transferred. You keep your cash flow. The bill does not disappear, but it stops leaving your account every year when you may need that money the most. The second is the surviving spouse carryover. When one spouse passes away, senior exemptions and the assessment freeze do not automatically transfer to the surviving spouse in many states. Families lose these protections by accident in the same year they are already managing the hardest transition of their lives. But if the surviving spouse files the right paperwork, often within a short window after the death, those exemptions can be kept alive. The tax bill stays where it was instead of jumping at exactly the wrong moment. The third one people underestimate until they add it up. In a number of states, once you reach a certain age, your vehicle registration fees or annual excise tax are reduced or waived entirely, small every year. But it is your money, it is sitting there, and it is yours to claim. Let me bring all of this together the way it actually looks for a real person, because numbers and rules wash over you until you see them connected to a life. I once worked with a woman I will call Margaret, 72 years old, a widow living in a paid-off home that had quietly doubled in value over the years, getting by on her Social Security and a small pension, doing everything right, paying every bill on time, and sitting on 3 separate exemptions she had never claimed. She was paying the full Medicare Part B premium every month, over $200 gone before her deposit landed. She was paying the full unfrozen property tax on a home that had appreciated for years with none of the 3 protections on file. And she was paying more in federal tax than she actually owed because neither the senior additional deduction nor the new bonus had been applied to her return, and her withholding had never been adjusted. 3 forms: a Medicare Savings Program application through her state SHIP office, the senior exemption and assessment freeze filed with her county, and an amended return through a free TCE volunteer preparer. Nothing about Margaret's life changed. She did not move. She did not sell anything. She did not fight anyone or navigate anything complicated. The only thing that changed was how much of her own money stayed in her account at the end of every month. And here is the part I want you to really hear. Margaret was not getting away with anything. She was not gaming a system. She was simply finally claiming what she had already earned over a lifetime of doing everything right. That is the entire point of everything I just told you. Being legally exempt and actually keeping the money are two completely different things. The law gives you the exemption. The form is the bridge between the law and your account. And the agencies are not going to build that bridge for you. That is your job. And now you know exactly how to do it. Here is what to do before this week is out. None of it costs $1. Call your county assessor's office and ask by name whether the homestead exemption, the senior exemption, and the assessment freeze are on file for your property. If any are missing, ask for the form and the deadline. Call your state SHIP office. 1-800-MEDICARE gets you there. And ask to be screened for a Medicare savings program. Ask about extra help in the same call. Check your most recent tax return for the $6,000 senior bonus deduction and the age 65 additional standard deduction. If either is missing, call your preparer and ask about an amended return. Go to lifelinesupport.org for the Lifeline phone discount. Dial 211 for energy assistance. And if you have not adjusted your withholding since your income changed in retirement, have that conversation with your preparer this year. That monthly adjustment may be the quietest raise you give yourself in 2026. A few phone calls, a couple of forms, that is the entire distance between where you are right now and money that has been legally yours all along. I am Dale Creston. Subscribe, turn on the bell, and I will see you in the next one. This video is for educational and informational purposes only. It is not legal or financial advice. Social Security rules, payment schedules, and direct deposit regulations vary based on individual circumstances and are subject to change.